Suvodeep joining us. Suvodeep Rakshit, Economist at Kotak Institutional Equities. Suvodeep, what are you making of it? Does this seem like a blip to you or a beginning of a much more prolonged slowdown?
See, I think it kind of depends on what we call as a slowdown and what kind of our potential growth or expected growth for the long term is. Now, India has we have always said that the potential growth is somewhere close to around 8%, if not higher. But given the current phase of slowdown, and it's not a recent one in our opinion, what we have been saying is that it's kind of accumulated over the past few years. The kind of fundamentals or the kind of growth that we have had is a reflection of the slowdown that we are having right now. So in that sense, we believe that it's a structural slowdown. That obviously does not mean that the 4% is something or a 5% is going to continue forever. That's certainly not the case. Typically, it's a kind of a small cycles that the growth path usually moves along. So even though we are kind of reaching a trough kind of a zone right now with probably closer to a 4.5% this quarter, maybe the next quarter slightly better. But I think overall what we should kind of take away from these numbers is that the kind of growth that we have had over the last few years in terms of leveraged consumption or kind of lower savings financing consumption with kind of income growth not being very robust, I think these kind of macro fundamentals is what is now reflected in the kind of slowdown that we are having, and in the sense that the kind of demand slowdown especially that we are looking at over we have seen over the last couple of quarters, and we possibly will see over the next few quarters.
Okay, do you see any kind of a boost coming in from the late monsoon on the agri side? Do you see any benefit of that? Also, there are hopes that we might see the government announce something, further stimulus or at least pressure on further spending. Any other triggers that you're anticipating in the near term?
I'm not too hopeful on the agri front because there is some amount of disruption in the crops that we have seen due to the late monsoon or the untimely monsoon that we have faced. Probably the Rabi season will be better given the kind of reservoir storage and the levels that we have seen post the monsoon. But that is something more on the the fourth quarter or the first quarter of FY21 that we're going to see the benefits come in. Immediately, I don't see much of agricultural growth coming because of the monsoon, or if anything, there is a slight chance of a negative impact from the kind of rainfalls that we have seen. If you're looking at the kind of growth profile, I think it's important to note that manufacturing continues to remain weak. We have not seen much, kind of pickup in terms of the growth rate, though due to the festive season, we've seen some pickup in certain sectors. But having said that, I go back to the original statement that I made, that it's a demand issue that we are having on a structural basis. For that, there are various ways of dealing with it. Now, the kind of path that we have been envisaging in terms of the reaction that a government should have is that yes, there should be kind of demand stimulus being given out, but I think it should be more focused in terms of which sector you are trying to address. For us, we think that rural stimulus or spending on the rural infrastructure, spending on rural incomes is something that should be the focus areas rather than a broad brush income tax cut in some sense. That's also to do with the kind of marginal propensity to consume that we see between a certain class of income earners that needs to be factored in while you are prescribing for a kind of a demand stimulus. Overall, I think even though this is a demand slowdown, from a long-term perspective, when we talk about potential growth of the Indian economy, I think it's important to note that it's not just consumption that can drive the growth forward. And to enable investment demand or the investment expenditure, especially by the private sector, there is a host of other measures that the government has been working on, some of which we have already seen come through, some of which are in the works in the kind of legislative agendas that we are seeing very recently. Say, for example, the labor laws that we are seeing, the corporate tax cut we have already seen. Those will have some benefit over the medium term. And I think that's the kind of growth that you ideally want to target, which is sustainable for the medium term rather than short-term boosts through the consumption expenditure.
But I'm just looking at what the 18-hour poll is penciling in, and the bigger problem seems to be with the industry growth, and we are expecting that figure to shrink to just about 1% for Q2. When do you see a revival come in when it comes to industry as a segment?
See, the way I look at it is that the industry segment is a reflection of what the demand sentiment looks like, which basically means that, if the consumer has, kind of spend his way through over the last few years, there will be a pause in the consumption expenditure, which we are seeing for the last, say, couple of, not even the last quarter, but even before that. We've seen a steady slowdown in some sense in the consumption expenditure. And the reaction of the industry will be, in most parts, to the consumption expenditure that you are seeing. Plus, when you're looking at the kind of, the production or the sectors that have slowed down more significantly than others, is mostly to do with the high ticket items, which also have an element of leverage consumption in it, which means that, the credit channels through the banking sector or NBFCs, those have to kind of clear up, which will take its own time. And once it clears up and the banks and in general, the financial institutions are ready to take a higher degree of risk in lending out and reaching out to a wider set of customers, rather than, the premium good ones and good credit ones. I think that's where the kind of leverage consumption comes back. But for that, you need to let the current slowdown kind of pass, whereby the consumers have also built in some amount of savings which they have depleted over the last few years, and then come back to the market and kind of get back to the leverage consumption bit.
All right, we'll leave it there. Thanks so much for joining us and taking us through the latest on GDP, the economy, and really what to expect going forward.